Well, hello, everyone. One of the things I've been thinking about was the really exciting sales release and earnings release that came from our friends at Walmart this week. If you missed it and hadn't heard, they not only had a great fourth quarter, which is critical for any retailer, but had a wonderful year in a very challenging retail environment. It's one thing to kind of look at the top line numbers and just look at the sheer size and volume of the business, but when you dive in deeper, there's some things, particularly for those of us who work in the digital space, who are all about driving sales online, that really stood out. But you probably got to start with the top line sales overall. In case you missed it, Walmart sales for the year were pretty pretty significant. Over $600 billion for the year, 611.3 to be exact, and that was up 6.7% for the year. When you break it down by the company's major divisions, Walmart US delivered $420.6 billion. That's a 6.6% increase on a comp store basis for the year. Walmart International did over $100 billion in sales again, and that also is pretty significant in a challenging international retail environment. And my former colleagues over there at Sam's Club just had an absolutely awesome year again, and they finished the year at $84.3 billion. Really nice growth on a year-over-year basis there. But if you work in the part of retailing that a lot of us do, one of the interesting things was the digital or the e-commerce part of the results that were really exciting. For example, total e-commerce sales for Walmart were $80 billion for the year, and the amount of inventory delivered out of stores or that customers ordered online and picked up in stores just continue to be a significant and huge part of that business. Walmart's advertising business that we know here in the U.S. as Walmart Connect also grew pretty significantly. Growth, I believe, on the order of around 40-something%. And in Walmart Marketplace, those sellers who sell on Walmart's platform, they're now at over 400 million SKUs on Walmart's platform here in the U.S., adding to the assortment that Walmart's buyers put on the site and offering obviously much greater breadth to Walmart's shoppers than just what their buyers themselves provide. So also, if you look further into the e-commerce side of the business, Walmart's U.S. e-commerce sales were up 17% in the fourth quarter, on top of up over 16% on a year-over-year basis in Q3. And e-commerce sales contributed 140 basis points of the growth that Walmart experienced in the fourth quarter. All really big numbers, really exciting trends. But then when you go a little bit further, and Walmart talks about where a lot of their drivers of growth are, grocery and consumables was really an area, those fundamental basic items that Walmart customers need to live every week, every day. Both dollars and share growth was pretty significant for Walmart. Walmart continues to see higher income shoppers shopping with them as the effects of inflation drive even the highest income consumers to look for value, to look for savings at Walmart. And Walmart generally excels in inflationary periods or difficult economic periods where consumers of any income demographic are really looking for savings. And then Walmart also commented on the fact that their private label growth, the categories and the items that they have that are private brands, continues to be a significant driver of their growth. They also talked about the fact that I think a lot of analysts felt like Walmart's got a good handle, good control of their inventory. So many of the supply chain issues that plague not any one retailer, but a lot of retailers during the pandemic, and as we began to emerge from the pandemic, really caused problems for a lot of retailers. Walmart, that impact was less significant, and they feel pretty good about where they are and what kind of place that they are in. All this suggests that in inflationary periods where brands are looking at how they spend their dollars to drive business and where growth really comes from, Walmart is clearly one of the places that they want to go. And I say that with a little bit of pride, having been a former Walmart and Sam's Club associate. But even as we talk with our clients about business, a lot of brands are thinking about cutting back spending, cutting back on investment. And you can certainly understand that in uncertain economic times. But I would always argue, both in the role that I have now and even as a buyer for Walmart and Sam's Club, that, boy, think about where you place your bets, and place your bets in terms of resources, in terms of investment, in terms of focus, where there is an ROI, where the best chance for growth is. And it feels like that Walmart is certainly one of those places. And then, a lot of folks will ask us, well, in practical terms, what does that mean? That put more focus, put more investment. I think it's the time of the year where a lot of brands have got to look at a couple of things that are key drivers of success. One of them is their content, their items, and how they are depicted on Walmart.com and on SamsClub.com as well. And are they presented in the best possible light? Is your content optimized to Walmart's search algorithms? Are your items placed onto the right digital shelves? Are they in the right categories to where consumers can find them? And what's your content quality score? Are you absolutely making sure that your items are objectively lining up with Walmart's content style guides? And obviously, we know from our business that that's pretty important. Second thing is what are you doing to optimize your organic search? How well your products show up in non-branded and organic search scenarios on Walmart.com, both on the desktop site and on the mobile app. These are both shopping scenarios, consumer journeys, where a lot of sales are won and lost by brand if you don't show up, if your items don't come back in relevant search terms that are maybe generic in your category. Are you the choice that a consumer is going to see, or is it your competitor, or are they going to get no results at all? That's obviously an incredible missed sales opportunity. That's always important, but it's particularly important now when we're all thinking about how do we get the maximum out of our effort to drive sales. And all of those things, having a content strategy for your business, optimizing your organic search performance, set up then your spend on retail media, your spend of dollars to drive consumers to find your products on Walmart, both in stores and on Walmart.com. And make no mistake, a shopping journey that may end up in a physical Walmart store, in many cases, starts online, in particular on a mobile device. So your online presence isn't just about driving a digital transaction. In many cases, it's what helps the consumer pick that item up off the shelf in a Walmart store near them. So your investment in your presence online doesn't just drive an online sale, it also drives an in-store sale at Walmart as well. And that's one of the ways that Walmart is very different from Amazon. On Amazon, you really try driving pretty much 100% of the time towards a online sale. At Walmart, a sale could end up being recorded and a shopping journey could begin and weave through a number of different paths. And that's probably a whole nother Scott's Thought edition for another day. Key thing though is it's great time to be a supplier and to be working with Walmart, serving consumers, driving sales. But the challenge I've always think about is your strategy buttoned up? Do you have every driver of success at Walmart locked up, focused on, and being executed to the best of your ability so that you can really drive sales? I hope you are. If we can help you, please let us know. That's what I've been thinking about. Have a great week.